Well, thanks for joining us here on a Monday. I'm Marlon Bowling with you. Lots of stuff going on, and let's go to the phone and help sort it all out. Let's go check in with Brian Splitt of Allendale Incorporated in McHenry, Illinois. Brian, good to have you with us here on a very active week, the way it's shaping up here. You and I were talking right before we came live on the air. It sounds like volume is already going at a pretty good pace here on the corn.
Yeah, that's right. We've already almost traded 220,000 contracts of December futures here, and we've had really good volume the last several sessions, 200 plus. But we're almost at the total volume today as what we've had Wednesday, Thursday, and Friday of last week.
Does that tell you that's bringing in a whole lot more investment money now?
You know, commitment to trade report last week still showed the funds short both corn and soybeans, and you know, that data is as of last Tuesday, so there has been some buying since the data is accurate as of. But yeah, that still leaves a lot of buying to be done, and if the funds feel that there is a problem with the crop, they are likely to go long, and we've seen the funds regularly go long 200 to 250,000 contracts, you know, on the way up. And you know, on soybeans, it wouldn't be out of the ordinary for these guys to, you know, go long 100 to 150,000 contracts. So.
Well, I know they're not directly related, but I did note over the weekend where there was a lot of news coverage over the wildfires in the western half of the country. And although it's not directly connected to the northern Dakotas there with their crop problems, it did call attention to it on a wider basis about the drought impact in parts of the West. So a lot of analysts saying that that's just increasing public awareness about the situation, I believe. Brian, we got some new export inspections out a moment ago. I'm looking at them right now. Let's take a peek at what they are this week. On the corn, we have a total of 1.01 million tons compared to 1.14 last week. Last year, it was 1.36. Sorghum, 112,000 tons, so they're back at it again. Last week was only 16,000. They almost took a week off there. A year ago, 124,000. Soybeans, 475,175 this time. Last week was 281,000. A year ago, that total was at 390,000, so they improved on both those numbers. And the wheat at 533,800. Last week was 518,499, and then a year ago it was 379,726. So pretty good numbers, especially on the soybeans and the wheat. But is that really going to have much to do or even get noticed here by the trade today with the weather?
Put it this way, I haven't even looked at the inspections and could not care less today.
All right, so let's dive into the prices and let's see where we now stand. On the corn, we've been strong all morning. Right now you have September 7.5 higher. It's right at that $4 benchmark. December new crop now 7 3/4 higher at 412.5. Soybean trade over there, we have the August contract currently showing a price of 10.22 1/4, so it's now up 21 1/4 cents. It's come off its high by 3.5 cents now. We have November now at 10.36 3/4. That's 21 1/4 higher. I believe we made 4-month highs overnight in the soybeans. By the way, corn made a 1-year high, I understand. If you look at the wheat trade, in the wheat in Chicago, we have that September contract 12 3/4 higher at 547 3/4. That is off of its high from early in the morning by about 6 cents now. We have the Kansas City wheat market on September now trading at 555 3/4. Currently 12 3/4 higher. And in the Minneapolis trade, September now quoted at 795. That is 30 3/4 higher. We're still 4 cents off of our overnight high. And then if you look at the cotton market, we have December currently 93 points lower at 67.66. We'll be back in a moment. We'll talk more with Brian Splitt of Allendale about our livestock trade when we return on the other side. Well, let's resume our conversation with Brian Splitt of Allendale Incorporated in McHenry, Illinois. And Brian, wanted to take a look at this livestock trade sector here. What are some key points that traders and producers need to be keeping an eye on here with all the volatility going on in the grains? Maybe there are some pointers you can offer on the livestock side too.
Sure. It looks like the August live cattle futures had found support last week at the 100-day moving average, and that's the first time that we've seen that moving average since December. A breach of that, which would also take out last week's lows, would likely push this market. And there's some longer-term forecasts to see live cattle futures revisit their April lows, and I think that's eventually where the target would be, down around the 105 level for this August contract. On the hog side of things, very quiet trade here. Actually, we've got several contracts trading at or near unchanged right now. The July contract has pretty much caught up to the index, and now it's up to the trade to figure out whether cash is going to come back down and meet August, or if August now needs to rally and go up to where July is going to leave the board.
Okay, so let's take a look here on the lean hogs. We have the August contract 24 lower right now at 82.98. It is off its earlier low of the morning by about 45 cents or so. We're still pretty far away from our earlier high of the day by in the neighborhood of $1, about 90 cents off of that. Now we have October down 13 at 70.85. Let's jump back to the cattle market and catch up on live cattle and feeder cattle. And Brian was talking about some pointers there to keep an eye on technically on the August live cattle. Right now it's at 113.93, so we are softer by about 85 cents compared to our close on Friday. October currently down 57 at 113.25, and if you look at the feeder cattle trade so far, feeders have the August contract 90 lower at 144.12, and September down 92 cents. It's showing a last trade, well, now down 82 at 144.20 would be our last trade there. So basically about $0.50 off of our high of the day. So now it's getting at least closer to the high than what it had for a low at 143.38. Brian, when you look at the cattle complex overall here, what kind of money are the packers actually making now compared to what they were making here a couple of weeks ago?
No idea.
All right. Let's take a look here at the tie with the feeder cattle market compared to the corn.
Well, we've got, as this corn market goes up, it's going to make it a lot more expensive to feed an animal. And, if we're looking at this market, we've made some highs back in May and then back in June when it looked like the corn market could have stalled out on good weather. But now as this corn market starts to firm up, I would expect that to be some potential catalyst for this feeder market to make some new lows. And very similarly on the feeders, support last week at the 100-day moving average. So if we take that out, we're taking out last week's lows, and we're likely to take out the June lows as well, and that would look for further losses there.
Well, Brian, lots of great information, and thanks for sharing those points to watch from a technical perspective here on the cattle side. If somebody wants to reach out and contact you guys there at Allendale, how would they reach you guys?
You can look at us online at www.allendale-inc.com or call us at 1-800-2-MARKET, 1-800-262-7538.
That would be great. All right, thanks for the help. I appreciate it. Brian Splitt of Allendale Incorporated, and he's based in McHenry, Illinois. Very busy day. And he said the volume on the grain market is already very intense here today. Already the volume what you normally see in a whole day.
Okay, we're not even halfway there just yet.
At least on the corn anyway.
Thank you so much, Markets Editor Marlon Bowling.